Fernando, put on your economist hat. Investments go up and down in cycles, right? We've known that 15, 20 years ago, mobile home parks, you could just gobble them up for huge returns. And now they're way overbid and overpriced. And it's very challenging. Are we anywhere near that? Now we see just explosive growth in this great asset class, incredible returns. There's lots of supply. Do you see that 5, 10, 20 years out some of those profits starting to go down, some of the pickings harder, some of the locations to build on more challenging to find, as it especially attracts more and more institutional capital?
Yeah. So just like Scott said, this is a hyper localized investment. So to say that the US is oversaturated, you can't generalize like that. You can't even say that a city is oversaturated, or even a part of a city is oversaturated. Maybe you could say a neighborhood is oversaturated because it falls within maybe a 3-mile radius. But let's just look at the stats here, right? So prior to the pandemic, 1 in 11 households use self-storage. After the pandemic, 1 in 9 households use self-storage. And that number is continuing to go down, which means more and more people are using self-storage. One of the things that adds to this is the affordability crisis we have in this nation. And that crisis is not being solved in any way, shape, or form. So when it is cheaper to, instead of opt for a 3-bedroom house, you opt for a 2-bedroom house, and then you could rent basically the equivalent of that 3rd bedroom for 1/10 the cost on a square foot basis, that self-storage is always going to win. The second thing that I would like to point out is when you said, hey, mobile home parks 20 years ago, you could pick them up for, a steal, and now you can't. You still could pick them up for a steal. You could pick up any asset for a steal that is an imperfect asset. Real estate isn't the stock market. So there is areas where you can buy deals that are below market value. And this is how we find our properties, right? So if you look at the breakdown of self-storage, I think there's a lot of opportunity over the next 20 to 30 years to invest because of this consolidation that's going on in the market. Right now, around 70% of those 60,000 or so facilities are owned by mom and pop operators, unsophisticated operators that don't have institutional levels of cash and operating efficiency behind them. So that's why our strategy, and same thing with Scott, is to pool these assets together and sell them off into portfolios to these larger fish up in the feeding chain. I think that's going to only continue to happen until those numbers switch, when all of a sudden 70 or 80% of the market is owned by, the top 6 operators in the country, like you see in multifamily right now. But I think we're decades away from that coming. And then again, if somehow we don't get a way to figure out this affordability crisis, self-storage is always going to be a better option to store your possessions than storing them in your home. Right. And the only way I see the affordability crisis going away is by completely getting rid of zoning in all major cities. And there's too many NIMBYs in, not in my backyard people in the United States that they will never allow for complete zoning to be removed. It's just not going to happen.